this is really about bookings. Bookings came through stronger than expected. And that's really going to be the focus here. It's obviously take rates as well, which I think came in marginally better than expectations. It's been a bumpy road since the IPO. It's an execution story. This is definitely the first step in the right direction for Uber. Comes down to the call, but that feather in the cap for Dara and team so far.
What about profitability, Dan, overall, and the comparison between Eats and ride sharing, and which one's improving faster?
Well, it's definitely ride sharing, and I think they've talked about, in terms of where they could get to potentially on profitability. It's going to be an uphill battle in terms of Eats. You see the pressure they're seeing from Grubhub and others out there in the space. That's really going to be the big question for investors. Can they ram not just take rates but margins on that front? That's going to be the focus right here, as right now, even with binoculars, you can't see profitability.
Do you agree, Tasha, on the gross bookings? 41% gross. If you take out currencies, then it's about 34%. What does that tell you?
Yeah, so I think it's good that Uber is still reporting this number, unlike Lyft. We had thought that they might have been hiding that basically because we think the overall ride-hailing market growth is slowing down, and we see that. But thinking longer term, so at ARK Invest, we're long-term investors, and Uber does not have a credible autonomous driving story. So in the future, they're not going to be able to maintain the cut of gross bookings that they take today, which is around 20%. We think it's going to shrink to the low percentage points because they will have to partner with a technology provider who will get the majority of that.
So whereas Dan thinks that margins are going to improve, you think they worsen even when we get to the autonomous driving era of cars?
Yes, exactly. And we see today that insurance costs are a huge portion of COGS. That's only going to scale as rides scale. So then what levers do they have? Do they take a bigger cut from drivers? Well, drivers are getting angry about that. Right now it looks like they're fueling Eats with subsidies. So that doesn't really seem like a profitable business either. So even just the core ride-hailing business doesn't look super attractive, but certainly longer term, they're going to lose out in autonomous.
Deirdre, you've been digging through the numbers. What else have you spotted?
That's right. Well, Uber breaking out revenue by region, which we did expect. There's something that sticks out here, not really in a good way, and that's its performance in Latin America. This is one of its fastest growing and most important markets. Revenue here shrunk by 13% year over year, perhaps indicating that the fierce battle it is facing there against Chinese ride-sharing rival Didi is taking a toll on its market position. The management says that they maintain their category position. That means the leader in its market. So another soft point in this report that I just want to point out could be its declining take rate. That is a percentage of the total trip or delivery that Uber earns. Now, its Eats and rides combined fell to 18%, from 22%. So essentially, the lower that number, the more that its drivers keep, and Uber does not get for its bottom line. So harder to get profitable. Now, another major expense that I just want to identify is driver incentives. They more than doubled last quarter. Most of that increase due to Uber Eats, where we know the company is investing in heavily. And this is another very competitive, crowded market, guys.
Deirdre, thank you. Dan Ives, you and I were sort of chatting ahead of this report. You were really wanting to know that take rate. Explain why that's significant and what the number tells you.
Yeah, 20% is sort of the line in the sand. The question is how much they're getting from each ride, as well as even in the combined from Eats. I think there's definitely pressure you're seeing from the Eats piece, but it comes down right now, if you look at them versus Lyft, Uber right now is doubling down on incentives. They're not going to significantly ramp the take rate, but they're going to try to right now focus on growth on that three-head monster of ride-sharing, Eats, and freight. So I view this as net a positive in terms of bookings of that stature, given the take rates we're seeing. That's going to be a focus in the call, but the line in the sand's 20% in terms of take rate.